What's going on, YouTube fam? This is the Wealth Investing Network. We do this for the win. You're getting a sneak peek into my stock portfolio and a sneak peek into my research on stocks. Today, we're talking about Broadcom, a semiconductor chip maker that makes chips for Apple, whose stock has been on a pretty choppy ride in the past year or so. And we're comparing them with Qualcomm, who also makes computer chips and headsets and things of that nature. But before we really get into it, there's something I have to ask you to do, and that's please hit that like button, turn it blue, drop a comment, subscribe if you're new. All those things help our channel grow, helps the YouTube algorithm, and that's a win-win. We like that here at the Wealth Investing Network. Now check this out. I want to start with the business cycle of these companies. A lot of companies that we talk about are in the growth stage. A lot of times they're pre-profit, pre-positive cash flow. But the companies we're talking about today are in the mature stage. They're paying out a dividend. They've got cash flow. They've got profits. And these chip stocks kind of go in waves. There have been many times in these companies' life cycles where people think these companies aren't going to sell as many semiconductor chips. They're going to be on a decline. And these companies find a way to either extend their life cycle or they never reached a decline in the first place. And I think Broadcom's a great example. They reported earnings recently at the beginning of September. The company reported strong earnings and provided a better than expected outlook for its October quarter. The CEO said there's robust demand across many of their different segments. They're generating billions of dollars in their semiconductor solutions segment, and their software segment continues to grow. They also bought back $1.5 billion in stock during the quarter. And buying back stock is a very shareholder-friendly thing to do. Now, as we'll see when we move along, this company is very attractive to a lot of investors because they make wireless chips for smartphones such as Apple's iPhones. And they also have a growing business in infrastructure software for mainframes, data centers, and cybersecurity. And earlier this year, they announced a deal to buy VMware. So these are some of the kinds of things that you want to look at when you're thinking about investing in Broadcom. Now, we could go to their 10Q and their investor presentations, but I don't want to spend a lot of time on it. It's generally very positive. Probably the biggest numbers to look at are their increases. You'll see significant increases across the board in terms of net income and revenue, 23% growth in net revenue. And they just really knocked it out the park this quarter. But because I like to give the bull and bear case, the only negative number that stuck out to me was their long-term debt. We're looking at $39 billion in long-term debt, over $50 billion in total liabilities. That's a very large number, but as we talk about, debt isn't really a problem until it is. Okay, moving on. We're going to talk about Qualcomm, but we're not going to focus very much on their earnings. Their fiscal year is a little different, but don't let that confuse you. Again, they generally reported pretty good things. If you look through their investor presentation, you're going to see them focus on a lot of different kinds of things, a lot of different consumer products, industrial products, edge networking stuff. They're really focused on their Internet of Things revenue. That's a part of their business that they really want to grow because keep in mind, handsets are such a big part of this company's business. And a lot of people might think that's not as attractive as making chips for iPhones. So they want you to know that by 2024, they're trying to have $9 billion in Internet of Things revenue. But again, when you dig into the numbers, just like Broadcom, you're seeing positive things across the board. They're talking all about 5G. They're talking about their strategic partnership with Samsung. But at the end of the day, the stock market is a little bit forward looking. So when we look at what Qualcomm is expected to do in the future, yes, we see impressive double-digit growth in the 30% range in 2022. But check this out. When we go to 2023, you see analysts expect a drop-off to the single digits, growth of around 6%. People are expecting a lot of weakness in the consumer. There's supposed to be a slowdown. People are throwing around that R word a lot, recession, a stock market crash. Inflation is eating into people's discretionary spending. Because consumer goods take up such a big percent of Qualcomm's business, the expectation is that growth will slow. And the same goes for Broadcom, actually. Analysts are expecting about 20% growth for this year, but next year it's supposed to taper off to about 6%. But like I say a lot, when it comes to computer chip stocks, these things come in waves and cycles. And so deep pullbacks are not a novelty for these kinds of stocks. When you look at a stock chart, it might not seem like it, but we can see drops of up to 30, 40%. They happen quickly, and they sometimes take a long time to bounce back. So it can look pretty bad when the stock is headed towards $200 and it drops back to $120, or when the stock goes from near $100 down to $60. But when you're investing for the long term, those drops don't seem to matter as much. I'm a long-term investor. I am invested in Qualcomm. I'm also invested in Broadcom. So keep in mind, I'm not a financial advisor. This is not financial advice. I'm just showing you my framework for how I look at stocks. Now I'm going to take this from the perspective of red and green flags. I'm going to throw in Qualcomm, Broadcom, and also Nvidia because this is a major player in the space. This company has a huge market cap, but it was much bigger. They were on their way to being an $800 billion company, close to $1 trillion company. But we have talked about this stock on the channel before. I'm not going to drill too much into this. This is just to show the example that the market cap is really just what investors think a company is worth at a given time, but it is not really connected to to their revenue. And that's how you get a price to sales ratio in the double digits. This is a number that you want as close to 1 as possible. And usually the market rewards you a higher premium or the multiple that you pay for a stock in terms of price to sales when you have high growth. But when that growth drops from a healthy double digits, 30%, 50% down to the single digits, okay, it happened for Nvidia. There is some expectation that that could happen for Qualcomm and Broadcom. So this is something we have to keep our eye on. But again, we're approaching this from red and green flags, and a green flag would be Qualcomm's PE ratio. The average PE ratio for the S&P 500 historically is around 20, so Qualcomm coming in well below that is a good sign. Both Qualcomm and Broadcom have revenue in the double digits. The question will be, can they maintain this? Both Qualcomm and Broadcom have decent amounts of cash, but I would award the green to Nvidia because they have much more cash than they have debt, and that's something that Broadcom and Qualcomm might bring up a little bit of a red flag for me. Again, not a huge concern, but something to keep in mind. The very last thing I'm going to look at is the trends for these companies. We're looking at this black line, which is the 200-day moving average. I like to show these trends for a kind of a medium to long term because it shows that even though the stock has fallen maybe 30-40% from its 52-week high, the trend is still up. Broadcom, same story, but it is rounding out. For Broadcom, this is really the first time that it's touched below that 200-day moving average since the fear and panic that happened at the beginning of 2020. Based on that, maybe this is a good time to get into the stock, but definitely be careful if we're seeing slowing growth numbers. Something could happen similar to like what happened with Nvidia, and that pullback could turn into a temporary downtrend. Going back a little further with Broadcom, you can see this incredible slope up in the blue line from 2016 to 2017. Cash flow followed that, earnings followed that soon after. But when you look at the stock chart, investors got a wind of that in 2016, and it brought their stock price from 120 all the way to 275 by the end of 2017. But just as growth kind of leveled off for the next 2 years, we saw a decrease in their earnings. The stock also kind of traded sideways for about a year and a half, 2 years. So these companies don't get rewarded on what they've done in the past. They get rewarded on what's expected for the future. And so if a consumer slowdown is expected, these companies are not going to get rewarded in terms of their stock price. But being a long-term investor, it's not like I'm going to sell my shares of Broadcom. I'm going to keep receiving dividends from both of these stocks and enjoying that. And if I see a deep enough pullback and I think it's not warranted, I might step in at some of these prices and start buying. Like if I see Qualcomm drop to their pre-pandemic levels around $95, I could definitely see myself stepping into that kind of pullback, as long as the thesis isn't broken for this company. If they continue their deal with Samsung, if they look like they're actually on the path to achieving some of these targets in terms of Internet of Things revenue, if Broadcom is still making chips for Apple and the iPhone, well, then these stocks become even more attractive to me. And maybe they'll make up a larger and larger percent of my portfolio. But I want to hear from you. What do you think? Comment below. Just even leave a comment of the ticker symbols. If you like Qualcomm, just type in QCOM. If you like Broadcom, type in AVGO. Hey, if you like Nvidia or AMD, type in their ticker symbols. Don't forget to like and subscribe. Also, check out my other videos if you're interested. I'll leave links in the description and in the cards. Thank you so much for watching. I have to go take down some giant sunflowers. See you in the next video.